Hi guys, Ryan Ng here, and today I'm going to share with you about this promotion that FX Primers is having. Right? FX Primers is a forex broker that I've been trading with them for the past 5 to 6 years, and this month they have a double dynamo bonus, right? Whereby, let me scroll a little bit to the bottom. Alright, so here it is, right? So whereby they are giving 100% double dynamo bonus on up to $10,000, right? So what this means is that for every dollar that you fund into your account, they're going to match it with another dollar, right? So, but this is only up to $10,000, right? So if you fund your account with $10,000, FX Primers is going to match it with another $10,000. So now you're going to have $20,000 to trade with, right? And this is for every dollar, right? So if you fund $100, you're going to get $200 to trade with. If you fund $500, you're going to get $1,000 to trade with, right? And on top of that, they're also going to give a $4 cashback for every lot traded, right? So what this means is that for every standard lot you trade on the platform, you're going to get $4 cashback. So that's about 0.4 pips for Forex, right? And you can use this $4 cashback to trade Forex, commodities, energies, and indices, right? So basically anything in the FX Primers platform. Let me show it to you over here. All right, so we look at the, oops, sorry. Right, so if we look at the market watch over here, right, so you can see all the Forex products at the top, right, so you can trade all these products, right, and we scroll further down, they have gold, they have silver, they have the S&P 500, they have copper, they have oil, they have the indices, right, indexes, they even have stocks like Google. Alright, so they have a whole list of stocks that you can trade, eBay, right, the more popular ones, and right at the bottom we have gold and silver again. Alright, so these are basically all the products you can trade, right? If you don't know how to use this platform, it's pretty easy, right? And I have another video of that, and you can look for it, alright? Or I'll do another video training for this separately. Right, so back to this double dynamo, right? So this promotion is only valid until the 30th of September, right? So if you sign up for an account and fund it before this date, you're going to enjoy these two bonuses, right? The double dynamo as well as the $4 cashback. Now this $4 cashback is a fantastic bonus, right? Now assuming you trade one standard lot every trade, yeah, and in one day maybe you place 5 trades, right? So that's $4 times 5, that's $20. And if you trade every day of the month, that's about 20 trading days, right? So that's 20 days times $20, that's a $400 cashback, and this is cash, right? There's no terms and condition, there's no minimum trades that you need to perform. You can take out this $400, or you can take out this cashback anytime you want, right? The moment it comes into your account, you can take it out, right? So this is a pretty awesome bonus, and I encourage all of you to go for this cashback bonus. All right, so that's all for this FX Primers promotion, right? So if you're interested to trade, or if you would like to sign up for an FX Primers account, right, you can sign up, and I'll put the link at the bottom, right, or you can key it in here. I'll put this link at the bottom of this video, right? So good luck for your trading, right? And I'll see you in the next video. Hi guys, Ryan here again. Hi guys, Ryan Ng here, and today I'm going to share with you on our very first lesson on Forex. Right? So basically today we're going to cover, it's a very short session, and we're going to cover what is Forex. Alright, let's get started. Okay, so what is Forex?
Forex basically is short form for the Forex exchange market, right? Forex exchange market. It is the simultaneous buying of one currency and selling of another via a broker or dealer. It's operated through an electronic network of banks, corporations, and individuals trading one currency for another. Forex is also the largest financial market in the world, right? About $4 trillion volume is traded a day. Right? So basically, if you were to go to the money changer, right? A very simple example of what Forex is all about. If you were to go to the money changer and you are going to exchange currency, right? So for example, you're going on a holiday, you're going to exchange currency. So you're going to sell your local currency, all right? For example, I'm in Singapore now, so I'm going to sell my Singapore dollars to the money exchanger, and then I'm going to buy a foreign currency, right? So for example, if I'm going to Malaysia, then I'm going to buy Malaysian ringgit, right? So I will sell Singapore dollars and buy Malaysian ringgit, right? So that's basically what Forex is all about. The average trading volume of Forex, right? Basically, Forex is the largest financial market in the world, right? As you can see from the diagram over here, it's about $4 trillion a day, right? This was as of October 2010, right? It's much more now. It's close to $5 trillion a day volume now. If you compare it to the three largest stocks exchanges in the world, the New York Stock Exchange, the Tokyo Stock Exchange, and the London Stock Exchange, you can see that it is much bigger, right? We're talking about 4 trillion over here, whereas the New York Stock Exchange, largest stocks exchange market in the world, is only $74 billion volume. Okay, so basically what is traded, right? When we talk about Forex, what is traded? Now when we talk about stocks and shares, people know, okay, what is traded, right? We are buying a stock, we are buying a share of a company, right? But for Forex, what is actually traded, right? And how is the price determined, right? So for Forex, money is traded, right? Currency is being traded, right? You are selling one currency, buying another currency, right? So it's just like buying a share of a country, right? So for example, if you find that if you feel, right, or you analyze that the economy of this country is going to be very strong this year, what you could do is at the beginning of the year, you're going to buy that country's currency, right? So price of a currency is a direct reflection of what the market thinks about the current and future health of a country's economy, right? So if more people are buying US dollars, that means people feel that the US economy is going to be strong, right? If more people buy the Japanese yen, a lot of people feel that the Japanese economy is going to be very strong, all right? So next, how can we trade currencies, right? How can it be traded, right? Currencies can be traded, right, in four main ways, right? The first one is the spot market. Right, spot market is the most commonly platform where we trade currencies, right? That's where you and I will be trading on in future, right? So currencies are traded immediately on the spot using the current market price. So what do we mean by immediately? Right, so unlike other products like stocks, you know, where if you want to buy a stock at a certain price, you have to wait. All right, you might not be able to buy it immediately. But for currencies, you can trade, or you can buy or sell a currency almost immediately, right? Because it is the most liquid, right? So many people are trading it, right? 4 to 5 trillion dollar volume a day. Any time of the day, 24 hours, you are able to trade currencies on the spot market. You can buy and sell at the current price almost immediately, right? Currencies can also be traded on the futures market, right? It can also be traded as options, right? So options, futures are quite similar. It can also be traded on the ETFs, right? So ETFs are basically, they will sell it as a basket, right? So you could have some ETFs where people trade currencies, and they trade a basket of stocks, and they put it all together as one fund, as one product. All right. Okay, so what we want to cover here is liquidity, right? So what is liquidity? Liquidity refers to the level of market interest, the level of buying and selling volume, right? So when we talk more liquidity, more liquid means there's more volume, right? More people are buying, more people are selling. All right. Next, we're going to talk about the Forex spot market. All right. So as I mentioned earlier, right, Forex spot market, right, currencies are traded, right? Okay, currencies are traded as a pair most of the time, right? So it's a simultaneous buying of one currency and selling of another currency, right? So like I mentioned earlier, if you go to the money changer, you are going to sell your Singapore dollars and you buy Malaysian ringgit, right? So it's done simultaneously, right? When we trade it on the spot market, right, the currencies are listed in pairs, right? So for example, we get a base currency against the quote currency, right? Base currency against the quote currency. For example, GBP slash USD, right? So this means we're going to trade the British pound against the US dollars, right? So basically the price will show how much the base currency is worth as measured against the second currency, the quote currency, right? So in the example of the British pound against the US dollar, right, let's say the price is 1.51258. This means that what? This means that 1 British pound is worth 1.5128 US dollars. All right. So base currency against the quote currency. Now, in case you're confused, you are not sure which is the base currency and quote currency, that's fine, right? These are just technical terms, right? Not very it does not affect your trading, right? The only thing that affects your trading is the price, right? The price of the currency. That's the most important thing you need to know. All right.